Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today again is Michael Becker.
Hey, Paul.
Michael, what does it take to put together an ownership in a multifamily property? What's probably the two biggest things?
Teamwork, right? I don't know what the other one is, Paul. You're stumping me here.
The money.
The money. There you go.
You need the money. And not everybody comes to the table with having millions of dollars in money to put together their own syndication or put together their own transaction. So they need help with partners. And we always talk a little bit about being in the back of the airplane with all your partners. Well, in the podcast today, we have an expert, I would think, in the education of syndication. And so he's usually with his partner, but today he is not. So in the podcast, we want to welcome Robert Helms. Robert, thanks for being with us in the podcast. We appreciate that.
Hey, guys. Thanks for having me.
So you may know Robert because he has, 250,000 downloads a month with the real estate guys, one of the foremost educators of syndications and real estate in the business. So we're pleased to have him in the podcast today. I'm going to kick it over to Michael and let's start some of the questions.
Yeah. Hey, Robert, thanks for joining us again. You were on about a year ago, I think it was. So if everyone wants to find more information and listen to that one, you go back about a year in the backlog and find that episode. But we appreciate you coming out. I thought for those that don't know who you are, maybe you could start off and give a little bit of background on yourself and kind of how people would know you professionally.
Well, you bet. And it's great to be back. Thanks for inviting me back. I guess it must have gone okay last time.
It did.
So, my background, I started investing in real estate in my early 20s. My dad was a broker and he said, oh my gosh, you've got to come and invest in real estate. And I got the bug, my sister, not so much, but I got into it and started to learn to sell real estate. And I was a licensed salesperson for 18 years. And pretty much every check I got, I'd go buy something. So I became a collector of real estate. And then a funny thing happened. My eyes got bigger than my wallet. I started to realize there were more deals than I could personally do. And I started to partner with people. And at first, it's the usual suspects, friends and other, agents and people in your family that are interested and kind of back into this whole idea of real estate syndication. And, on bigger deals especially, it's hard to find that person that's got all the money. And most of the bigger deals we do, we bring together people. We aggregate capital as well as the team. You talked early right out of the gate about team. So critical. One of the most important things is who's on that bus of yours.
Yeah, that's great. And then we met each other because you're a host of a very popular podcast. Maybe talk a little bit about your podcast and maybe kind of give a little brief explanation of that and where people can find you.
Right on. Well, 20 years on traditional radio. We're still a radio show, and we started podcasting this show right at the beginning. And so, millions and millions of downloads later, we're in more than 190 countries. It's just crazy. We meet people all the time that found us on a whim or listen to, while they exercise or all that kind of stuff. It's a real estate centric show. So we talk about all things real estate, but we also think that before you're a real estate investor, you're an investor. So we talk a lot about broader picture economics, especially if you're in the business of talking to people about investing in real estate. Then our premise is you ought to know something about the other things that they could invest in so you can speak that language. Everyone has their money somewhere. And so if you can speak to them intelligently about the other asset classes, then at least you have a fighting chance. But the show airs weekly. We have all kinds of amazing guests, and it's been going on for 20 years. We honestly thought when we started the show that about 2 years, we'd cover everything there is to know in real estate, and we'd be done. And here we are in our 21st year of broadcast, still talking real estate every week. It's realestateguysradio.com.
That's amazing. Also on iTunes, Stitcher, pretty much anywhere you listen to this podcast, I'm sure you can find there. So transitioning over here now, one of the things I think we want to talk about on this podcast is just the general syndication and maybe kind of the top 4 or 5 things you need to know when you're an aspiring syndicator starting out. You have a lot of experience. You have a class we'll talk about at the end of this as well that I've been fortunate enough to speak at a few times with you guys as well and teach there. Maybe kind of start off and maybe tell, maybe the top 5 things that an aspiring apartment syndicator or just a syndicator in general would need to know when they're thinking about, is this the right business for me? Is it not? Maybe some just general tips that you provide for everybody.
One of the paradigms I love to break is actually when we have you on stage at the event and we ask now of the deals that you guys fund, how many are a single guy or a couple writing a check versus how many are multiple people coming together in a syndication? And the answer is usually
virtually everyone's a syndication.
Everyone, right?
Yeah.
And so that's the first thing is that if I'm buying houses, if I'm buying a retail strip mall, if I'm buying a fourplex, maybe I can do that on my own account. But if I want to get bigger faster, then I've got to get to the point where I'm investing as a team sport, whether I'm the active person who's finding the deal and raising the money, or I'm the passive person who says, you know what, gosh, Michael, you're great at this. Why don't you take my money and invest it for me? Either way, the idea is that together, everyone achieves more. We can do bigger deals, have better margins, get better access to deal flow if we work together. For whatever reason, this business, like most businesses, people tend to think in terms of competition, where I always think in terms of cooperation, right? Who else do we know? If we're missing a piece, let's find somebody else. So I think that's the first thing. One of the big lessons is it is a team sport. Nobody is going to be super successful in acquiring massive amounts of real estate on their own.
Yeah. So lesson number 1 is a team sport, right? So you need vendors. So if you're the lead in the deal, you need vendors in the marketplace. You need your lenders, you need your management companies, you need inspectors, and of course you need passive investors and potentially the other people to co-guarantee loans with you, sign on the non-recourse carve-outs, whatever that would be, right? So that's
everybody brings something to the party, and you shouldn't be expected, or anybody shouldn't be expected to have every one of those things. We're looking for how can we be stronger together than we are independently.
Yeah, perfect. So maybe one of the next things that I know I've heard you talk about before is kind of don't cut yourself short on your experience. So maybe you've never actually done it yourself, but you have some level of relevant experience starting out. Maybe talk about that a little bit.
Your 10th deal is easier than your first deal. And people get all, excited about it. But then they also look at the other side and go, oh my gosh, I don't know enough. I haven't done this before. I've never raised money. But what you have done is built up what we call your experience resume. Everything you've done in real estate and in business and much of what you've done in life has groomed you to be ready to take on something like this. So the skill sets of things like project management and communication and looking for opportunity and due diligence and all those things that you've done investing in your own portfolio are going to be assets for you as you go bigger, as you raise money for other folks. So I think that the biggest thing people do that I see they do is they sell themselves short. They know that they messed up on a property and they lost a property in the downturn maybe. Okay, that's great experience. What did you learn from that? Why are you stronger and better today having gone through that? I invest passively with folks in syndications a bunch. It's my favorite way to invest. And even though we're active syndicators, the way I have teamwork in my life is I get to be part of more deals by investing passively. I hardly ever will invest with someone who hasn't had a terrible, awful, lost all the money story. Because I know they've been through it. They can handle it. If someone says, I've done 25 deals and everyone's gone perfect, then they're not getting my money, right? You don't shortcut the process. And those things that you've learned along the way are going to become super valuable as you move forward.
What do you think about that, Mike? I think that's an important point that for the last 7 years, 8 years, everybody that's gotten multifamily, everything they have touched has turned to gold. And I always try to highlight deals that we've done 10 years ago or 20 years ago or 30 years ago that I did, that some of these deals did not work out. And, what's your feeling?
Yeah, I mean, it's just trying to be a student of history a little bit and understanding that maybe history doesn't repeat itself, but it can rhyme for sure. So making sure there's some basic tenements. So we talk about that all the time here on the podcast or whenever I speak about it is there's, some certain core principles that you need to make sure you understand, and location and buying in a good location, having enough capital and making sure your debt is able to withstand, the various cycles that are inevitably going to happen in the marketplace. And as we record this thing in February of 2018, interest rates are starting to rise right now and have for the last couple months, and that's going to make it different than what it's been the last 5-6 years when we've been in a pretty low, stable interest rate environment. If that continues going forward,
yeah. If you bought a deal at 7 cap and now it's turned into a 6 cap, you have been a genius.
Yeah. Yeah.
Anyone who started in the last 5 years looks brilliant, right? That's the thing. But Paul, such a good point. Perspective is long term, right? My dad's been investing in 7 different decades. He believes anytime an interest rate has a single digit in it, it's good because he's been through those other times. He's been through ups, downs. He's seen it all. And I think change is such an important thing. That's another lesson, is that there will be change no matter what's happening now. People say, well, it's hard to get a deal. That's going to change. When interest rates change, when defaults start to happen, when all these changes happen, there's going to be new opportunities. So change is not your enemy. Change can be your friend if you're prepared for it.
Yeah, that's right. One of the concepts we talked about, I've heard you speak about, and it certainly rings true with me as someone that's taken in, I have over 350 unique investors that I've had the pleasure of taking money from. So everyone has different personalities, and, they don't always work the best with the person taking the money. The concept of taking an expensive check, maybe talk through that a little bit.
Yeah, we say sometimes that's the most expensive check I ever took. And it really comes down to making sure it's a match. You're not in a position that, even though you might need to raise $1 million, $500,000, $7 million to do a deal, you're not desperate for it. You're looking for a match. You're looking for the person who has the opposite problem. They've got capital. It's sitting there. It's not performing. It's at risk doing something. And they would rather put it with someone who they know, they like, they trust, they feel good about, they get the deal, they get the market. And yet they aren't coming out to the seminars. They aren't listening to the podcast every week. They're not wanting to get their hands dirty. And that person is a great person if everything else fits. So the thing about not taking the most expensive check is just make sure, we say in our business, it's never about you as the syndicator. Never about you. It's always about the person putting in the money. Is this right for them? Is it the right time horizon? Is it the right amount of risk? All those things. So we like to spend time on the front end before I'd put one of those people on my list of 350, making sure we really understand what's in it for them. What are they trying to accomplish? What do they have to work with? Yeah. You never want to take too much money. Most of us in syndication work strictly with accredited investors. Not everybody does. There's ways to work with non-accrediteds, but I'll tell you what, that's a whole challenge upon itself. And just because someone's accredited doesn't mean they're sophisticated enough to know. And so you can discover in a conversation pretty early, would I like to be in business with this person for the next 5 to 10 years? Because really, every deal we do is a business. It's typically set up as a limited liability company or some other entity, and we're going to be in this boat together for 2 years, 5 years, 20 years, whatever it is. So just approach everybody, and they should too. The investor should be approaching the promoter, the syndicator, to say, is this someone I would feel comfortable being in business with long term?
Like, you have backed down investors, people that presented you with money and said, hey, listen, take this X amount of dollars into the transaction. But you said, this is our first transaction together. I don't know if I want to take that much money in this first deal.
Yeah, sometimes you just, to Robert's point, I mean, especially the last couple of years have been, a frenzy, and people kind of have the FOMO, the fear of missing out, that whole thing going on. And so they just want to throw money at you. And as a responsible steward of their money, you need to make sure you feel that they actually understand what they're getting into. And certain people are super eager, or it's just a larger percentage of their net worth. And I don't want to be responsible for someone's last nickel in a deal, because then, I know that's going to be the most expensive check I've ever taken, because they're going to call me and be, worried about every little bump along the road. Because when you're a syndicator, you're making a pro forma when you're doing a deal, and the pro forma is just basically a series of educated guesses. And every pro forma anyone's ever done has always been wrong. You either do better or you do worse. You never actually hit exactly what it is. So making sure you kind of right size that with their net worth and their level of understanding of the investment, for sure.
Yeah, such a good point. You only get really one chance to figure that out on the front end, and before now experience rears its head. So there's things you can do to shorten that up. But I think, it's hard. It's easy to say. It's easy to say that you don't want to take all their money, but it's tempting when someone's sitting in front of you. We literally had a woman who missed out on a deal, so she left us a blank check signed. And she said, you just make this out to whatever LLC you get next, and as much money as you need. that is the most expensive check you'll ever take.
Yeah, no kidding.
That's a big no.
So kind of I might transition to the next point. I know that we talked about that, this business is a little bit easier than you think it would be from the standpoint of, raising capital. So maybe kind of talk about that a little bit.
Yeah, people get all up in their head about, having to talk to people about money. And I get that. I mean, it's a sensitive subject. It has been since, you were raised. But at the end of the day, keep in mind that your opportunity is exactly that. It's an opportunity for them. We really didn't think this way at the beginning, but we got to a point in our syndication business where as soon as we would do a deal, and I know you've had this happen, it funds and you have more interest than you have room.
Yep.
That's a problem. It's a great problem, but it's a problem. I remember sitting in my office and a guy came in with his paperwork all filled out and his certified, check. And my assistant said, "Gosh, I'm sorry, sir, but we filled this one up." And he was like, "But I just heard about it 2 days ago, and I've been, moving money in my account." And so you hear this going on. I walk out and I apologize and say, here's the reality, right? We had $3 million worth of interest. We had $1.8 million worth of room, and we just couldn't fit everybody in. So the fairest way we thought was kind of the order that they brought in their paperwork and their money. And, we can't be keeping track of every single person, but I'll tell you what, let's make sure that, you're ready to go on the next one. And we built the relationship from there. And we got to the point where there would be more money than there were deals. Now, that's still a problem. Yeah. But the premise of that is it's easier than you think once you start doing good business, solid business, you treat people right, you treat the money as a steward, you become a servant, all those things. Now you will have this business that continues. You get to the point where it's all referral business and you can't even take new investors. I know several syndicators that just don't have any room for new investors because their current investor base funds everything they can do. Okay, well, before you're there, before you get to there, you have to learn all the skills. It is easier than you think. And I just don't want people to think that it's so difficult that, I can't do that. Because I tell you what, we've seen dozens and dozens of people who, quote unquote, try to raise money and give up.
Yeah.
And, Brian Tracy says the average number of times someone will try a new venture before they give up is less than one.
Yeah.
They don't even really try. And now easy doesn't mean that people are walking into your office and dropping checks off unless you do the work. Easy, Jim Rohn's definition of easy, is something you can do. So this is a business you can do. The hard part, finding the deal, vetting the deal, getting the capital stack put together, figuring out how to get on, that's the hard part. Money is easy. There's tons of money out there. It takes finding it. It takes educating the person, making sure it's a match like we talked about. But money's not your problem, right? All those other things, that's what you get paid to do.
Definitely. So one of the last concepts I know we talked about before we started recording here was just kind of doing your due diligence, not only on the individual deal and the property, but also on the syndicator if you're a passive. So maybe kind of talk about some of the things that you've seen through your years about due diligence.
It's one of those unsexy, unexciting parts of the business. Like nobody teaches a class on due diligence because, frankly, people would have to stay awake during the class, right? But it's so important. Just in your own account, think of an investment you've made. When you've cut a corner, not had an inspection, or the inspection called for additional inspection by another trade, and you've said, well, I'm going to save the time, save the money, and then lo and behold, something happens, right? It's ounce of prevention. I think it's even more so when it comes to a syndication, because now you have a group of people investing. They all have those different needs, wants, and desires. So the investor, the person passively putting in their money in, needs to make sure they understand the market and the deal and the timeline and the business plan, but they really need to make sure they're vetting the syndicator, the promoter, the sponsor, the person that's going to be driving the train, and their team. Because again, being a team sport, it's like, well, who else is on your team? If you're new, then you use the credibility of your team. You might be brand new to syndication, not to real estate, but brand new to syndication. But if you put a team around you that's done a lot of deals, well, that's what they're buying. They're buying the team. So if I'm investing as a passive, I want to make sure that the various components that need to happen in a transaction are covered. It doesn't have to be the sponsor that's responsible for everything. Yeah. If I'm a new sponsor and I say, yeah, but I have this partner who's done all these deals, it's helping to qualify and all, great. That's a good, solid answer. But someone needs to be doing those things. And then when it comes to just the level of care, if you are that sponsor, you might accept something, in a deal that's just in your own account and make a decision and live with it. But it's a different nature when you're raising other people's money. So if in doubt, get the one more inspection, stay another hour, make sure you walk every unit, not just half the units, all those little things. Just push due diligence kind of one level up. And no one's ever upset that they did more homework on a deal than if they did less.
Yeah. And one of the things that's great advice. Definitely make sure that when you're taking in someone else's money, you're a steward of it. You're taking that extra care, because you don't want to get those have to ever deliver a horrible message either by phone or by email to people. People trust you with their money, so you need to take that responsibility seriously and make sure that you're very diligent about everything.
If I can just jump in here, I often hear people say that you have to treat the money as if it was your own. I think you have to treat it better than it was your own. A lot of times our own money, we don't give it that high level of duty like we should, because, hey, if I lose it, whatever. It's just a mindset. When it's other people's money, even if it's folks that can afford to lose it, which it should be, that's who she would be talking to about investing in our deals, you still want to do everything within your power, knowing that not everything is within your power, but the things that are, don't cut corners.
One of the things I've observed in my career now is that no one ever comes to my house, my office, and hands me money or hands me a deal. That you got to go out and, get out there and start putting yourself in front of some people. And it's one of the things that Paul and I have been trying to do a little bit more lately. And that's why we have the Old Capital Speaker Series, which is a good time to maybe promote that. On March 28th, we're having Dr. Mark Dotzauer, the former chief economist from the Texas A&M Real Estate Center, come out to the Grapevine Convention Center. Our doors open at 6, and he'll start speaking at 8. All right, 7, I'm sorry. So if you want more information about that, go to the oldcapitalpodcast.com website. It's oldcapitalpodcast.com. And there you can sign up for Dr. Dotzauer on March 28th. And I think Robert, if he's in town, he's going to try to stop by that one as well.
You bet.
But, speaking of getting out, you have a couple events. And I mentioned this. I've known you guys probably 4 or 5 years now. I think we met in 13 or 14, one of the two, by going to an event.
I went to the event.
I was a listener of Robert's podcast, the Real Estate Guys podcast, and I told Paul, hey, they have a syndication event coming up. It happens to be in Dallas. We live in Dallas. And so we just bought a ticket and ended up going as students in your class. So maybe talk about the real estate secrets of successful syndication. That's easy for you to say that. Maybe talk about that. You have one of these classes coming up here relatively shortly after this podcast airs. Maybe kind of talk about that generally, and what would someone expect to learn if they ever go to that?
Yeah, awesome. Well, it was a great part of our tenure and relationship is that it started that way. And clearly it was pretty evident that you guys could have been teaching that class. But the fact that you were open enough to come out, because it's not about just what's said from the stage. It's about the conversations, about people that you meet. And that's a big part of it, getting around and getting around people. So twice a year we do this event. It's a 2-day event. And it's really designed to cover the nuts and bolts of syndication. You're not going to learn every single thing you need to do, because that's a huge amount of work, but what you're going to get is an introduction to every single component. The two biggest issues that a potential syndicator has are finding deals and finding money. So one day we spend most of the time talking about where do we find the money, and one day we spend most of the time talking about where do we find the deals. And sprinkled in there, we talk about the legal aspects. We have a securities attorney that speaks about specifically syndication and PPMs and paperwork and all that stuff. And then we have a lot of segments in there that change depending on this section we call finding funding, is usually when we have you come up, Michael, and talk about the different ways you can fund a deal depending on the type of deal it is and what you have to work with and how much work needs to be done and all that. So folks who listen to your podcast are pretty well aware of those things, but there's a lot of other areas that people are talking about. The one we have coming up, March 2nd and 3rd in Dallas, we have not only Marisa Raul, the securities attorney, but also another attorney. His name is George Ross, and this guy's been an attorney for 50 years. He had done 700 transactions in Manhattan as an attorney before he met Donald Trump, whose personal business attorney he was for 47 years. So you probably remember George Ross from The Apprentice. He was that old guy who sat there and had that very direct manner, and he's almost 90. Thrilled to have him coming out. You're going to love this guy. He is no nonsense, but he has, talk about seeing everything that can happen in real estate. This guy has seen it all. But happy to have you out speaking again, and a great faculty. I think we have 10 different speakers over the course of 2 days. Big workbook. It's going to be a great event. In a minute, we'll tell you the fastest and easiest way to find out all the details, so you don't have to be taking notes and entering URLs and all that kind of stuff.
Paul, do you have something?
I was just going to ask, and the people that attend that seminar, are they mostly like up and coming deal sponsors, or are they a lot of like limited partners that just have the money, but they want to kind of figure out what the rules are and kind of figure out how not to get screwed? I mean, do you kind of have a breakdown of who's who in that room?
Yeah, such a good question. I think when we started the event 8 years ago, we thought it would be for the person who had maybe been Fannie and Freddie'd out. They had a good portfolio themselves, but wanted to get to that next level and learn to syndicate. That's kind of how we geared it. What we discovered after the first 3 or 4 is that about 25% of the audience aren't coming to learn how to syndicate. They're learning how to vet a syndication. What do I need to know if I'm looking at passively investing? And that's an absolutely valid person to come to the event to see what should it look like? What are the things I should be asking? What are the questions I should ask? But what's really interesting for us about this event is the quality and caliber of people that come to it. We do events that are just general, invest in real estate type events. We speak at other people's events more than hold our own anymore because this is kind of our niche is syndication. But we'll go speak at a conference and we'll get all kinds of wide-eyed folks who want to buy their first single-family house. Awesome. That's not this crowd. Almost everybody who comes already owns a substantial amount of real estate. Many have done a few syndications. Many haven't quite figured out all the legal aspects and all the ways to, really source get great deal flow and find the right kind of people to talk to about the money. And so that's why they come to it. But we get both. I would say the majority of people are, I've gone as far as I can go on my own account without just waiting to earn more money and invest in another property. I want to really, catapult my business and go bigger by figuring out how to bring other people along. That's kind of the main target audience.
Like I'll reiterate what I said earlier. No one's going to come to your house or your office and hand you money or a deal. So you got to get out there. You got to get to go to events. You got to go to the Old Capital Speaker Series. You got to go to the syndication event that the Real Estate Guys host. That's where you're going to meet people. And you never know that one relationship, that one person you meet can turn into a relationship that can make all the difference in your career. You never would know unless you get yourself out there and start doing it.
What I enjoyed when we had originally met Robert and his partner Russ is that we also met Ken McElroy at that event, and I had never met Ken, but he's one of those rich dad, poor dad advisors on the real estate side, and he was given kind of a case study on a deal that he was looking at, and he threw probably about 30 pages stapled together of a deal that they were looking at, and wanted everybody to do a real quick analysis and get everybody's feedback and how they would underwrite the deal and how this deal would work. And they were really searching for some reviews of how these deals were to be done. And so Michael and I did the case study too.
Like ringers.
The unfair advantage. Yeah. That was funny. I'm like listening to you guys going, okay, these aren't your average bears.
Yeah, we were the ringers in that crowd a little bit, and he was a great sport on some of the things that we brought up, and but that's kind of the quality of some of the teachers that come to your summit, your education pieces. These are pretty sharp guys, and I was really kind of taken back by the quality of the students from all over the United States that fly in and spend some time, 2 days. I mean, that's a lot of time and effort to do it. And you guys put a lot of heart and passion into what you guys do. So I endorse it too.
So the next thing that you guys have that will be my third year doing is you have your Real Estate Summit at Sea, which is coming up in April.
April, oh my gosh, right around the corner.
Right around the corner. And speaking of the quality of people there, every time I've been twice now, and even last year, I left thinking like, man, there's a lot of really accomplished people here, and I wasn't thinking that it'd be that way on the front end. But I'm looking back, and you spend thousands of dollars, and take over a week off your life to go to this event. Of course, they're going to be highly successful people because there's only people who can afford not only the money but the time to go to that. So maybe talk a little bit about that. This will be my third summit that I'm coming up in April, going out of Fort Lauderdale this year, I believe, right?
Yep, it's our biggest event that we do every year. This will be our 16th annual event. We call it the Summit because it's kind of the pinnacle of the whole thing. We spend so much time. It's 9 days together, 2 days on land, and then we get on a cruise ship. And what's great about the cruise ship venue is that it's very shielded from the rest of the world. Yeah, today you can. When we started doing this, there was no internet or telephones on cruise ships, which made it great. You could really be there. Today you can get, your email, but we're in this little cocoon and you really get to know folks. And it's not huge. There's a couple hundred people, all of whom, to your point, are already fairly successful because it's not inexpensive to spend this kind of time and do this kind of event. But the people that come are extraordinary. And for the 5th year in a row, we've got the author of Rich Dad, Poor Dad, Robert Kiyosaki, with us this year. He'll bring his wife, Kim, her 3rd summit. We've got the Creature from Jekyll Island author, Ed Griffin, is back with us for his 4th year. Economist and author Peter Schiff is back for his 6th year in a row. Looks like Kenny McElroy will be joining us for year number 8 in a row. Kenny's not 100% confirmed, but I think chances are really good. We have confirmed that Tommy Hopkins, the all-time sales legend, will be back with us again. Tommy's back for his 5th year. And
what's that like to sit down, Michael, and have a discussion with Tommy Hopkins?
Oh, yeah, it was great. I mean, I didn't know Tom Hopkins before I went on the summit. I mean, I've heard of him, but I never really ever get exposed to him. And I just absolutely was mesmerized and ended up going and paying to go to his last event that he had last year in Dallas. It was a 2-day training about championship sales training or whatever he called it. But it was great. He honestly was a highlight of the cruise for me personally.
He's a hoot.
I saw him back in the mid to early 80s, the 90s and 2000s. I mean, this guy, when you're thinking about being educated not only in syndication, but also in having the ability to have a good conversation and be able to talk with people and ask them for the money. I think Tommy Hopkins is a great sales coach and mentor of how to feel confident that you can ask for $100,000, $150,000. Mike, did you like that conference?
Yeah, no, it was great. So definitely I'm glad to hear that him and his wife are going to be able to make it back on this summit again.
Tell me a little bit about the color of the conference itself, Michael. I mean, did you sit down and talk with Robert Kiyosaki? Did you talk with leadership? Did you talk with some of these folks?
Yeah, that's the good thing about being about 200 of us last year, maybe a little bit more this year, and you're trapped on a boat in the middle of the ocean, so there's nowhere for them to go, right? And then every night at dinner, unfortunately for the people that had to sit at my table, I was one of the faculty members, so faculty stay at the same table, and then the attendees get to rotate. And you most likely will get a chance to sit at a dinner table with Tom Hopkins or Ken McElroy or Robert Kiyosaki and Kim Kiyosaki. So you sit there for a period of an hour and a half at dinner, and then you get to just either talk to them or observe them, have a conversation with some other people, and certainly accessible for photographs. And we always have these different events and parties throughout the cruise.
What's it like to have your picture taken with Robert Kiyosaki, to put it on your website, and then you can say, "I'm the smartest guy in the room."
So I became Facebook friends with the majority of the people on the boat. So everyone had the same photo for Robert last year from his birthday party. But
we had Robert for his 70th birthday, and he's a funny guy, and I've known him a long time. And he's a huge teacher, but he's really not about himself. He doesn't, like all the attention. He's happy to take a picture, happy to, sign a book, but he's not about that, right? So unbeknownst to him, we end up having this party that turns out to be a surprise birthday party, and he almost didn't come to it. He was like, I may just go home, go to my cabin and rest a little bit. And Ken McElroy said, no, Robert, you got to come down and just grab a cocktail with me. And he showed up, and we had this amazing party, and he stayed and walking back to his cabin that night. He goes, Robert, that was the best party I've ever been to. Yeah. I'm like, wow. All right. And so then everyone's getting up, taking that picture of the birthday cake and all that. He'll be with us for his 71st birthday. And it's crazy, right? When we could afford to pay the guy to be there. So we don't. We've never paid a speaker to come on the Investor Summit in 16 years. They come because they want to be there, because they want to participate. And to your point, that's why they're accessible. Ken McElroy loves to hang out and talk like you do with people, find out what's going on, get perspective. That's how we all learn and we all become better. The very first time we had Robert and Kim, I said, I don't know if I can set you guys up in the private dining room. And he's like, no, we want to be with everybody. So, and everyone's like that. It's not just the faculty. The faculty's incredibly amazing. I'm leaving out dozens of them, but the people that come from all over the world, I think we're up to 11 countries, 10 countries, something like that this year. People from all over the world are coming. And it really is this great opportunity to get with people that are going to the next level. So if you're thinking, well, gosh, that's maybe not me yet, just know that it's a very inclusive group. You'll learn a ton just from asking the right questions. And if you can't make it this year, come next year.
What I always like, the Robert and Russ always kind of joke with me at the syndication event that I'm always the guy that hangs out at the bar. I'm always the last one to close the bar down. And that's in a good way that I'm there making relationships and meeting with people. So that's one of the best things about the cruise ship. There's a lot of bars, right?
There's a lot of bars, and Michael's at most of them.
Hey, that's it. And there's the drink package this year, which is probably not a good thing. So people want to find out a little bit more about the secrets of successful syndication. I think I said that right. And the summit at sea. What's the best way for people to find out information, Robert?
We talked about this at your Outlook event. So we set up an email address, which is just outlook@realestateguysradio.com. So the word Outlook as an email, Outlook at realestateguysradio.com, and you'll get back an email that tells you all about these various things and how you can listen to our podcast and how you can come out to the Secrets of Successful Syndication and see Michael Becker live and in person.
There it is. It's worth thousands of dollars right there, right,
I
Paul?
bet it is.
So.
Well, we have to conclude. We can go on for a long period of time, but get a chance to visit with Robert next time. Make sure you bring Russ into the podcast, and we look forward to seeing him at that period of time. So don't forget Dr. Dotzer on March the 28th. I think Robert and Russ may be at that event too. Hopefully we'll be in town. Anything else going on?
That's it, really. If people like the podcast, we certainly appreciate ratings and reviews. And if you wanted more information about maybe the 15-page white paper about Financing 101, go to oldcapitalpodcast.com. You can find it there.
That sounds great. Robert Helms, thanks for being in the podcast. Michael Becker, we appreciate that. I'm Paul Peebles. Have a good day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.